Well, today is Thanksgiving Day, November 26, 2020. Let's go over our calls after we do our disclaimer. It's my trading plan for Friday, the 27th of November 2020. If we gap sharply in the undesired direction, the call's killed. No guarantee I'm right, so trade at your own risk. Let's go over our calls. Look for the pattern with the early high. This is it. You can tell because of the counter trend rally in the middle of the day. Friday's pattern has the early low. We said that, here's what we said. We said patterns negative. All you needed to do to erase the negativity is to gap and promptly overtake the high of the day. That didn't happen, and we got a decline. So that worked. These are my leans for next week. And Friday has the early low. We have an ultimate sell signal which hasn't played out. The target is 36.17.50. Almost always you get more than that. There's no time limit, but usually you don't have to wait long. Just ignore. During the day, MEJT said these drops wouldn't stick, and they did retrace. Well, normally this pattern closes near the low of the day. When that doesn't happen, it's positive. But the catch is we had an all-day rally and we couldn't take out any of these highs. All we did was retest the lows, and that's negative. So when you have conflicting signals like that, more often than not, it's resolved early the next day by gapping and taking out either the high or low of yesterday's trade. Sometimes, particularly on stub sessions such as we have tomorrow, you close a little change and then have the big move the following day. Well, here's our long-term resistance line. If we're going to break through it and hold it, you really should gap over the line. And if you don't, any move over the line most likely will retrace. Here's a less enthusiastic picture showing where we are. We're stalling right at this resistance area provided by these parallel trend lines. We still have a valid break of this trend line. We look for 250 points down from here. That's not too far really from this week's low at this point, but that's a target. That's not a stop and reverse. And if we do take out these lows, if this does print, I would suspect we'd see more problems. Well, tomorrow's pattern has early low. Doesn't mean you won't gap up. Now we have a half session tomorrow, so it's possible some of today's calls, the calls for tomorrow, might wait until Monday to play out. Markets don't like making big moves on stub sessions. Nothing's impossible, but usually you wait until you have more players involved. Now we have mixed indicators, so we use our rules. It's positive the normally bearish pattern from yesterday didn't close near its low, but if we gap and promptly undercut the low, that would validate that. It's negative. We rallied all day, couldn't close over any highs, but if we gapped and overtook the highs, that wouldn't validate that. We have a lower target. It's an ultimate target. It should print at some point. There's no time limit, but usually you don't have to wait long. We have a new negative indicator. Over 90% of stocks in the S&P 500 now trade over their 200-day moving average. You might think that's positive, but actually it means that the market's kind of exhausted on the upside. You don't really get much more than that. It's an extreme level. In the past, it's been seen only before major corrections. We also have sentiment levels also seen at major tops. Now, none of this requires we top tomorrow. Could go up tomorrow, but it shouldn't be long before we do top out. These are extreme readings. They're occurring right at a resistance level, and I'd be very cautious here if you're a bull. So I don't know if anything will happen tomorrow, but we have a lower target. Ultimately, it should print, and we have sentiment and breadth indicators, which in the past have been at these extremes only when we're at or near major highs in the market. It isn't a pinpoint indicator. It doesn't mean we can't gap up and go up tomorrow. We actually do have a higher price in futures, which hasn't been seen yet. These prices in futures do tend to print at some point. So it's possible. I mean, nothing's impossible. You could gap up, hit that price, 36.68 in futures, and then reject it. Doesn't break any rules. But I'd just be very, very careful here, because you don't get extreme readings like this in breadth and sentiment very often. And I do think it's a time to protect yourself if you're long. And that's today's call.